Hi, I'm JoAnn May from Forest Asset Management. Thank you so much for opening this video. It's November and we're in the midst of doing a lot of tax planning for our clients. One thing we're doing for them right now are Roth conversions. A Roth conversion is when you take money from your pre-tax IRA that is tax deferred and you convert it to Roth, which grows tax-free. In the year of conversion, it is taxable. So you might be thinking, well, why would I want to pay Uncle Sam a lump sum in taxes today instead of paying it over a long period of time? And 2020 is somewhat of a unique year that might drive that decision a little bit more. For example, the CARES Act that was passed for COVID relief eliminated required minimum distributions for 2020. So if you were required to take a distribution and you didn't have to, you might want to fill up some low tax brackets with a Roth conversion. It doesn't have to be the amount of your prior distribution. You can do small Roth conversions. Another reason to convert today is it's a general consensus that because of the change in administration in Washington, we might be seeing higher tax rates going forward. Again, a reason to convert today with the lower tax rates that we have today versus converting or paying tax in the future with higher tax rates. Another reason is if you and your spouse are both alive, you're paying taxes right now using the joint tax tables. However, if one of you should pass away, you'll have about the same income, but you'll be subject to the single tax tables, which are a lot higher. Matter of fact, the brackets are half as much as the joint tables. So you can quickly see you'll be paying more tax. The Secure Act also pushed off required minimum distributions to age 72. So you might not be required to take them yet, but you might be already retired, in which case you've got a nice window where your income could be lower. So a reason to convert in those years. Also, beneficiaries might be very, very lucky if you do some conversions, because if you have beneficiaries in very high tax brackets, for example, if your children are in high tax brackets and you could pay the tax at a much lower rate, they could inherit an asset that's tax-free, being that they're in higher tax brackets. That can be a lot more powerful. And also, the Secure Act also changed distributions for heirs or beneficiaries from stretching it over their lifetime to requiring them to take them in 10 years. That could mean much higher taxes for your beneficiaries. And if they are allowed to, or they inherit Roth IRAs that are tax-free, and they can stretch that now over the new 10-year period, they don't have to take out any distributions until that 10th year, allowing for amazing compound growth for those 10 years. So a huge reason for converting, in my book at least. I'm not opposed to doing micro conversions. You know, even 10 and 20,000. We don't need to do very large conversions to give you a large tax bill. We can do small conversions annually and to build up a large Roth IRA eventually. So there are some things to watch out for. For example, raising your income could raise your income for the Medicare premium, and you could be subject to higher Medicare insurance premiums monthly. So that's something we watch very closely, and we can run some numbers for you to see if that is going to affect you and to see if that's something you're concerned about. Who wouldn't want to convert? If you're leaving your IRA to charity, you definitely would not want to convert, because a charity doesn't pay taxes anyway. So you want to let them inherit the pre-tax IRA. If you don't have the cash readily available to pay the tax, another reason not to convert. Remember, conversions are permanent. There is no longer the ability to recharacterize or undo a Roth conversion. Once you do it, you must pay the tax. So there is some risks involved. One of them is market risk. If you convert $100,000 from pre-tax to your Roth IRA in 2020, and by April 15th of 2021, it's only worth $80,000, you have to pay tax on $100,000. That certainly is a risk. I consider that really a short-term thinking. If it's a long-term objective you have, I still think it makes sense to convert, even if there is short-term volatility. So you can see it's not just a math test, it's a stomach test as well. So if you'd like me to run some numbers for you, If you have any questions about this, this strategy, please give me a call. Love to talk to you about it. Thanks so much for your time and have a nice day.